Hi everyone and welcome to the London session update with myself, Kathleen Brooks, on Friday the 22nd of March 2013. Well, it's all about Cyprus today. It's not bailout 1, it's not bailout 2. We are on the third version of the bailout, which is now waiting for the Cypriot government to debate it and vote on it. The next step after that is for it to be agreed by the EU, the IMF and the ECB. And then a further hoop would be if that is agreed by the EU, ECB and IMF, then at some point next week, we should get a vote on it by the Bundestag. So the German parliament needs to vote on this as well. So right now, it looks like Cyprus is aligning itself with the EU rather than Russia. Russia, remember, has already lent Cyprus a loan. What we do know is that if Cyprus can get this bailout deal, then it will avoid sovereign bankruptcy in early June when a €1.5 billion bailout bond repayment, is due. So this is a really crucial weekend. Now, we're not necessarily seeing that in the markets. Let's take a quick look here. As you can see, this is euro dollar. It's still, it's still below that 130 handle, which is very, very key. But it has been really trading between 128.80 and 129.80 in the last few days. Hardly panic stations, even though if this bailout isn't agreed, the ECB has said it will pull out the hard guns. It will stop funding for Cyprus's banks, causing them to topple into insolvency, which would then really mean that Cyprus couldn't stay in the Eurozone. So we're a bit on a knife edge at the moment about whether or not there will be a breakup of the Eurozone. It could happen as early as Monday. However, this isn't being reflected in the markets, and I think there's a couple of reasons for that. Number one, we've seen some broad-based dollar weakness today, largely due to some weakness in dollar yen. That's toppled back down below 95, even though we do expect it to find fairly good support around about that 93.90 level, then 93.50. But that's one of the reasons why Eurodollar's held up okay. The second reason we think is because there's some expectations in the markets actually that what the ECB has done by saying it will do whatever it takes to protect the euro is being believed. So we've seen Italian and Spanish bond yields fall. So people do think that Italy and Spain are a different case to Cyprus. Maybe Cyprus is its own case. Firstly, because of how large its banking sector is, and second, because of those very large ties to Russia. But we do think that there's going to be probably likely to be no deal today on a Cypriot bailout package, but it could be one over the weekend. Now that could cause a relief rally across asset markets, particularly stocks, also the euro. But we do think that any euro gains in those low 130s, so 131.05 for instance, key resistance level, which we would expect to hold. Now in the longer term though, we do actually think that the Cypriot crisis, if Cyprus does manage to get a bailout, really highlights just how important the ECB's role is. Now this chart here is relative balance sheet. So the orange line is the Fed's balance sheet, so that's continued to move higher, when the white line is the ECB's one, which has dropped very sharply in recent months. We think that will reverse course, and that will also weigh on the euro and limit any upward gains. And that's because the ECB needs to continue to step in to protect Spain and Italy and the Eurozone financial sector if things in Cyprus do get out of hand. So do watch out for that. We're going to be watching this chart over the course of the next few weeks. But overall, it's all about Cyprus today. Good luck trading. Enjoy your weekend, and please do join us Monday for more. Thank you.